Good morning. How are we all doing? How's everybody? All good? Morning, Laceron. I can never say your name. Morning, Robert, Amy, John, Julian, Figidia, Jerry, Christian. How you doing? Ian, JC, Gregors, Neo, Monkey. How are we all doing? What the hell is going on with the New Zealand dollar? Things taken up like a rocket this morning. 150 ADR. There wasn't any news on the New Zealand dollar this morning. Not that I'm aware of, anyway. We had CPI for Japan, but for some reason, New Zealand dollar just decided to go parabolic. Let's go yen. We're on the way. So this could be the start of the drop. We'll see. But yen's certainly starting to find a little bit of legs this morning, but we'll see what happens. So yeah, weird. Morning, Guna. So today, obviously, CPI has come out as a negative for Japan. So obviously the yen has powered up because obviously when inflation goes down, what happens is currencies usually get stronger. Not usually completely the opposite. But obviously this market at the moment hasn't got a bloody clue what it's doing. So it just does the opposite. But anyway, it doesn't matter. They don't change their interest rates anyway, so inflation doesn't affect the market in the same way with the yen as it does with the rest because they don't ever change interest rates. It's always negative 0.1. So anyway, Lagarde speaking this morning, 40 minutes after market open is our first news today. We've got the CPI flash estimates for the Eurozone. We kind of know what they're going to be. Because we had the flash or the preliminaries for Germany and Spain, who are two out of the three largest participants for CPI in Europe yesterday, and they were all as expected. So I'd be very surprised if we do not get an as expected on this, even if it's out by 0.1%, not going to make a lot of difference. So I don't think we'll get a lot of movement off of that. However, market might use it as a moving mechanism. And obviously, we've got Lagarde. Lagarde, although this is orange news this morning, maybe because she's not taking questions, actually. Let's have a quick look. Conference. Might take questions, but there may be something coming out from Lagarde this morning. We're still waiting for forward guidance on October's rate increase. It sounds like we're going to get one, but if she confirms it this morning, we might get some strength on the euro and the Swiss franc. Main news today, though, is the CAD GDP and mainly PCE for the US. And then we've got University of Michigan at 3, which is hit and miss at the best of times. Sometimes we get ridiculous moves off of University of Michigan. Sometimes it just goes and does nothing. So wait and see. That's a lottery, the Michigan numbers. So we'll see what happens with that. PMIs on China over the weekend, which we don't worry about. All moves started yesterday. Weekly range just hit on the New Zealand dollar, US dollar. We've got 5 minutes to the open. I'm just going to whiz through the news because I've no idea where this strength is coming from on the New Zealand. Why can't I scroll back? Juice, wake up. Okay, so Barkin talking last night. The first news this morning was CPI for Japan. Here we go. Suzuki, we are closely watching FX moves with a high sense of urgency. Again, I won't rule out any steps to respond to disorderly FX moves. This is why this is powered up this morning. I have defense line in dealing with FX moves. I don't have a defense line in dealing with FX moves, i.e., no holds barred. You keep pushing us, we will destroy you. Basically, it's all out FX war. So they're basically saying, if you do keep moving the US dollar yen up, we will just launch a nuclear bomb and you will all die. Financially, that is. Not obviously in the real world, but this is basically Suzuki saying, we're not interested. It's coming down. So the market, it seems to me this morning, we're getting the same move on the yens as we had previously. So this was the last shot across the bows, sustained, I should say, because we get them every now and again. But there was multiple days here where they were like, you got to stop doing this. The market actually reacted. So rather than us getting the intervention, which is the parabolic, what we got was the market reaction, which was a 2-week sell-off. This, I suspect, is more likely that. We need to wait and see, though, because we've had plenty of pullbacks, on these yens, and then the market's gone, actually. So we'll wait and see. But either way, you want shorts on everything against the yen. Not everything. Obviously, that's massive overexposure. But if you're going to get in, you need to be short, not long. Consumer credit, GDP for the pound is as expected. French PPI at 1.4. So why is this New Zealand dollar going mental? But yeah, don't know. Big strong moves on New Zealand dollar. Anyway, we'll look at that in a bit. Right, just looking at the DAX before the open. So, has anybody else heard any news about New Zealand? Morning, AZ. Morning, Andres. Morning, Evans. How come it has to be specifically US dollar yen, which has a bomb and dies? It's all yen. No, it's just all yen. The reason the US dollar yen is the measurement that Japan uses is because the vast majority of their exports are to America and Canada and the West. All of their transactions are done in US dollar. So think about your business currency devaluing by 50%. What does that do for your business? It makes all of your products cheaper to everybody, meaning your profit margins are squeezed to nothing. Yeah. So as this goes up, Japan export business disappears. They don't make any money, which means their GDP drops and they spiral into debt. So what they need to do is control the US dollar yen pricing. 150 is kind of the cap we get to, and then they go, no more. Yeah. What they do then is they just buy up loads of yen. The yen strengthens dramatically and you get a 600 ADR move. It's called an intervention. It'll be down here somewhere. If it isn't an intervention, it would just be a change in trend. It's not in the market's interest to defy them, basically. If you defy them, you get killed. So if you are a central bank, institution, pension fund, hedge fund, whatever, and you are buying the US dollar against the yen and you are holding your positions, bear in mind the institutions do not use stop losses, right? What they do is they scale in and DCA into positions. So if you are long on this and they smash it, you are immediately in a massive, massive, massive black hole of debt. You are hugely underwater in drawdown. So it's not in their interest to push it, because if they push it, you have to buy it. If you buy it and they do that, you cannot get out of it. Yeah. So this is why the market tends to listen when the Bank of Japan talks, because they're basically saying, you know, we don't want to be nasty guys, but we've given you enough warning. If you don't, we will. So it's just a warning shot, and they get more and more frequent and more strongly worded, if you like, before they just go, right, screw you guys. They press the button and everybody. Ultimate pain. Right, DAX. We got a gap down this morning. Market's just opened. Oh, crap, I'm late. Market's open. Why are you not trading again? What is going on? Is that range size? Sorry, I just got to check this. I've got a problem with this EA. With invalid stop loss again. Okay, I'm going to have to change the way this triggers. I don't know what it is about this version of this EA that I've built. It uses totally different logic to the opening range breakout EA, although it's doing something very similar. But it's got this weird problem with invalid stop loss and TPs, except I'm calculating everything in exactly the same way. Obviously, I can't be because it's not working, but I am. And it just gets this weird error that it can't calculate the TP or the stop loss. But the only reason it's calculating that is to place lot sizing. Anyway, so I'm going to have to redo this. So it basically just gets in and then it sticks the stop after, but then you can't calculate lot size. I'm going to have to do this before it opens, aren't I? I have to do this a different way. Anyway, DAX pre-market. Might as well watch this one because I'm not in it this morning. So DAX pre-market 15. Oh, that's a slip. Look, pre-market 15. You've triggered. Probably triggered long on that, depending on where your offset was. So your long DAX, short's not triggered. So this morning, obviously, we've got gap fill to the downside. That's the initial easy play to the downside. We are on a pullback. This US dollar is still weak, which means the indices will still be strong. So from a longer term perspective, we've got a tiny gap fill up there to complete. This is the gap fill complete that we were looking at yesterday. So remember I said yesterday we'd be heading up to fill that gap. That's now done. We've got this gap up here at 200 ADR to fill. And as I said yesterday, we are on a pullback. We should be starting a pullback either on that or that, depending on how the market's viewing it. But we're looking at this area here as the target 225 for a potential support bounce. That would need the US dollar to rally again. So if we get negative news again today, we're going to get stronger indices. Negative news on the US dollar, stronger indices, and obviously that will help the DAX as well. So more long bias than short bias from a fundamental perspective, but we'll see where price goes. Obviously go with momentum with indices. So if it plays down to there, potential long opportunity. Upside risks today. There's no upside risk from yesterday because we're above yesterday's high. So we're looking basically at this area here, which is this propulsion gap, which is about 75% of ADR to the upside for a potential first batch of sellers. If we break through the gap today, we're looking for a retest on the reversal alert, which is sort of the 15,281 level. So it's this area here, somewhere around there in these propulsion gaps. So either that, or obviously we just go straight up, in which case we're going 3/4 of an ADR. Those are the plays. At the moment, though, you should probably be long on the opening range break. That is if you took the pre-market. If you're taking the 5-minute ORB, obviously, we haven't put it in yet. We've got 6 seconds. There we go. So there's your 5-minute opening range. Not a lot of volume this morning. I'd be surprised if the market's hanging around for Lagarde. Might be. That's 8:40. So it might hang around for 45 minutes. We'll see. But not a lot of movement so far this morning. Morning, Kennelly. Are you still keeping the pending orders on US dollar yen? Yep. I'm in 4-3 short now. And I've got one there and one there. These two are for intervention purposes, basically, just to make sure I add in. I'm not expected to get these. If this intervention happens, you won't get that. I won't get that. I'll get something around there. I'll get slipped dramatically. There won't be enough volume in the market to fill the orders, so you'll get slipped. But look at where we're potentially headed. If I ask to get in here and I get slipped down to there, that's still profit. So I'm not particularly worried about slippage. And in intervention, it doesn't matter because you're down there in literally 15 minutes. So it's not a problem. But if this does turn into just a normal market move, and we just basically do a quick 1-2 week drop, I don't know where we're going. So I might take those off. They're there purely for intervention. But this morning, obviously, we've started a move. So it may be that the Bank of Japan is not necessarily going to do it. If the market's going to pay attention and listen, they won't need to, will they? Morning, Marco. Harold, ask ChatGPT to fix the error. I can't put the code in ChatGPT. ChatGPT can't handle 45,000 lines of code and say, why is this going like this intermittently once or twice a week on one instrument and not doing it on the rest? ChatGPT is not going to know the answer to that question. I'm just going to fix the way it places orders in a different way so that it doesn't have to use a stop loss. I'm just going to use fixed lots, basically. I can't be bothered to... The problem with it is, I know what the problem with it is. It's MT4, but unfortunately. But to be able to use a percentage risk on a trade, you have to have a stop loss, because percentage risk is calculated on the distance of your stop losses times a percentage of your account. Yeah. So to be able to place an order with a percentage risk, you have to use a stop loss. Even if you're not going to use it, you have to have it placed to make the calculation. The problem is with the opening range breakout, sometimes, and today is a perfect example, it moves so bloody fast. Yeah. Look at this here. So that is basically where that candle closed. That is the recorded high of the pre-market 15 range, which meant that price jumped from there to there and didn't even print it. So what the EA did was go, okay, I'm going to do my calculation now. Hang on a minute. The price is in a completely different place between when I started doing the calculation and when I ended doing the calculation. It moves that fast. So you get this error where you can't calculate the stop loss and TP properly because the ratio doesn't work. It's a weird anomaly. But the way to get around it is just to use fixed lots. So I've got fixed lots in here. So I can say use a fixed lot size instead of a percentage calculation. I don't care. I'm happy to use fixed lots because I'll just calculate what the lot should be and I'll just do that. And I'll use a similar lot each day. So just a pain. But anyway. Right. So DAX is... there we go. So I'm taking the 5-minute range because obviously it can, because the market's slower. So it can do the stop loss calculation. So I'm taking the 5-minute ORB today. So break of the high or break of the low. Your 15-minute and your 5-minute low are pretty much the same level. So see where we go. If we break to the downside, obviously my target is here, which is down there, which is pretty much the gap fill. So if we make the run for the propulsion gap to the downside, that would be perfect for me if it breaks short. However, I'll watch this area here. We're probably going to get a reaction at the gap fill if we go for the gap fill. Obviously, if we go to the upside, we know where we're headed. So we'll come back to that in a minute and see where we go. The NASDAQ yesterday that I traded, I posted it in Telegram, but I got out of the short. So the NASDAQ yesterday... I got hedged into it, went long. TP on the longs was here. So I got out at 5R on the TP long. ADR was somewhere around there yesterday. And I said, you know, when we get to ADR, we're likely to run out of steam. And that's when I'll take a short. We went crazy for another half an ADR on the NASDAQ yesterday. So trailed a pending order, as you can see, underneath price, and then entered on that break and got out of the shorts. So exited the hedge for about $1,200 profit on the whole position. So it's good DAX, NASDAQ yesterday. Good example of the hedge strategy working. Well, doesn't always work that way, obviously. But so inside bar, pretty much. It's ever such a slight wick out the highs, but we're pretty much inside bar on the 5-minute range on the DAX. No volume today. So wait, we just have to wait for them to make a move at some point. Right, let's have a quick look at these ADRs because there's lots of them today. Morning, Keaton. Morning, Peter. I am traveling, so have a bad connection. Can you show your portfolio dashboard with H1M5? New Zealand dollars getting some drawdowns. Show my portfolio dashboard. What, you mean the trade manager? I can show you that, but that's not going to help you, is it? That's not going to be the same as yours, is it? I'm not going to be in the same trades as you are. My portfolio is totally different. My portfolio will be different because my portfolio is started at a different time to yours. Yeah. If you have two people trading the same strategy, one of them starts the first week of September and one of them starts the third week of September, you're not going to have the same portfolio. Don't forget, I've been in some of these trades for 2 months. Yours isn't going to be the same as mine. But there's mine anyway. So in 7% drawdown at the moment. Obviously, lot of lost banks this month on the squeeze. But 7% drawdown. I can bank around about 1.5 to, I don't even see it. About 1.5, 2, 3, 4. About 4.5% I can bank now, right now, which will obviously whittle this away to a sub 10% month. But obviously that will push that back up to a 12% DD. So I'm holding these positions at the moment because, which I'm going to go through now. A lot of these moves that we've been waiting for kicked in yesterday, obviously. So these the squeezes, like the CAD Swiss, we obviously looked at where we were going to bounce. We got the bounce yesterday beautifully, and we've started that bounce. I'm not getting out of anything. I'm holding until we are in a proper pullback. I am not expecting this to be a flag break. Not after that. I'm expecting a pullback and a 38-50% retracement style pullback. I'm holding this till next week. If we get a parabolic move again today, obviously yesterday, for example, CAD Swiss, which is why I'm going to look at the ADRs in a sec. But you see the CAD Swiss yesterday did 51 pips. So it did an ADR. We've been waiting for an ADR move, haven't we? For weeks, literally. This could well do 3 ADRs in a row. I'm not getting out. Holding. If it goes back against, it goes back against. But I'm fully expecting a pullback and then a continuation. So I'm expecting for the drawdown to get worse before it gets better. However, if it just wants to get better, happy days. I'm more than happy for the market to oblige. And today, we've got the catalyst. So that GDP on the CAD, if that comes out as negative, CAD Swiss much further down. The US dollar PCE index comes out negative, US dollar down, CAD down, pound US dollar up, CAD Swiss down. Everything that's been squeezing, if we get these negative news events again today, if Michigan comes out negative, the whole thing could be another 2 ADR away from where that peak was. You'll be out of everything, literally everything. It happens if anybody's been in here for a while with me, you sit in drawdown for weeks sometimes on these squeezes, and then all of a sudden, literally, I'm on here in the morning sitting in 7% drawdown. I come in the afternoon session, I'm sitting in 5% plus in my account with no drawdown at all. It literally undoes itself in 24 to 48 hours, like that. Climb up the stairs, fall down the elevator shaft. You are out of these positions in days when you've been sitting through them for weeks. That's just the nature of position trading. It's just the way it works. Because squeezes are slow, profit takes are incredibly quick because the banks need to do it fast. If they don't, they lose money. They can squeeze you and build those positions for weeks on end. But when they take profit, if they don't do it now, HSBC will. And every time HSBC take it, Barclays make a little bit less. So Barclays then do a bit more. Then Citibank go, crap, HSBC and Barclays have started, we need to do it. And it just comes down so unbelievably quick. US dollar yen, as Fagini has just pointed out, puking. This is it. Look. This thing here for 1, 2, 3, 4 days has rallied 239 pips. In 24 hours, it's dropped 50% of that move. In 24 hours. It took 4 days to get there. But look at the size of the move. Bang, bang, bang. Not unusual by Monday, Tuesday next week to be at least 1/3 to 50% of the way back through this move that started in August. 2 months, 3 days. Totally normal. That's what happens. Look at them here. Look. Climbing up for absolutely ages. Bang, bang. Climbing up for absolutely ages, bang. Climbing up for a bit, bang. Profit take moves are always massively fast. That's the whole point of what I teach in the bootcamp about elastic band theory. Think of it like an elastic band. The further you stretch that thing, when you let go of it, doesn't it? Comes back quick. You can stretch it as long as you like, but when you let go of it, it's from there to there instant. That's basically the way it works. That's what the market does. Always has, always will. So looking at these, long DAX, So watch the upside on the DAX. Sorry, bear with me one sec. Where's the TP? No, is it in there? Oh yeah, there it is. Sorry, I couldn't see I was looking at this thinking, where's my TP? I can't see it. It's there. Look. It's literally on top of that monthly. Just move that down so I can see it. So watch the DAX move up into here. Watch this area here. So potentially that. I mean, that whole area there at some point, this accumulation to the upside is probably where we'll get the first selling orders coming in. It may be that we get through all the way up into this area. That's ADR high. Right, ADRs. Morning, Baggy. Morning, Elliot. Sorry, I'm just... Does it typically bounce when there's an intervention? It depends. Sometimes it does, sometimes it doesn't. But it doesn't really concern you whether it bounces or not, because you make your money on the drop. Yeah, whether it bounces or continues, up to you. I'm looking for the intervention. This is not an intervention. This is just a move. If this was an intervention, you'd be down here in 15 minutes to an hour. Yeah, this is 3 hours. This is just a move. It doesn't matter if it bounces. Last time it didn't. Well, that's not true. Last time it did and it didn't. There's 3 interventions last time. First one was here, which bounced. Second one was there, which didn't. Third one was there, which started the profit take move on the previous leg. So, I mean, again, look at this as an example. 24th of February to the end of October. So February, March, April, May, June, July, August, September, October. 9 months to get there. And then we went from October to January, October, November, December, January. 4 months, 50% of the time to undo half that move. But look at the speed of it. Yeah, it's just like this took ages climbing. This came down. Every drop is a lot faster, isn't it? Basically, but markets are fractal. These sorts of things happen on all time frames. All these elevator shaft drops. So they happen on the 5-minute chart. If you crawl up on a 5-minute chart all day long, when you get to ADR or ADR 150, that happens, doesn't it? Very quick. But it's taken all day to get there, and then literally within 15 minutes, it's undone it on the 5-minute chart. It happens on the hourly, the 4-hourly, the daily, all time frames. Just profit taking. That's what the market does. It builds positions and then it takes profit. But when you're taking profit, you have to do it quick, because everyone else starts doing it as well. And every time someone else takes profit, your P&L drops, because every profit take means price comes down if you've been longing it. And every time price comes down, your P&L gets shorter and smaller. So you have to get out faster. And the faster you get out, the faster everyone else gets encouraged to get out, and it becomes a snowball. This is what happens in the market. Scramble for cash. All the banks do, isn't it? Pound New Zealand. Yeah, we can have a look at that. That's dropping at the moment. This New Zealand dollar is on a mission at the minute. I'm not quite sure what's happened to the New Zealand dollar, but it's just had a massive rally today. There's no real reason for it. The only thing I can assume is that we're building up, we're basically repositioning ahead of a news event. Oh, it's a cash rate, isn't it? Yeah, so this move we're seeing start today. Do you remember I said it's the last day of the quarter? It's the last day of the month and it's the last day of the quarter. So the market tends to reposition itself ahead to get targets hit and everything for reporting, for quarterly reporting. We've also got today possibly the start of the repositioning ahead of next week's rate announcement. So the market will want to either enter or exit positions in anticipation of what's going to happen with the rates, ready for when that move kicks in. So it looks to me like they're anticipating an increase or a freeze in the New Zealand dollar rate. We've also got the Aussie dollar rate. I think the market is probably anticipating a rise on this one because of their CPI move. So longs, I think, is what we're seeing. Basically, the bank's just getting long ready for these moves on Tuesday, Wednesday next week. That's probably all it is. And obviously exits from quarterly positions, which are ending today. Which account setup do you think is better for current conditions? 10K account? I don't know. What are the current conditions and what are the conditions going to be next week, Robert? It's an impossible to answer question. You're asking me what the market's going to do in the future. I don't know. Unless it's New Zealand dollar Swiss, the band has broken on that one. Yeah, so New Zealand dollar Swiss, obviously, the Swiss franc is strengthening, we know, but the Aussie and the New Zealand will be strengthening as well. So when you get, I'm out of pound Swiss short, by the way. That was that one that I took yesterday. Not yesterday. Yeah, it was yesterday, wasn't it? Sorry, H1M5, mean reversion entry yesterday. Target was that potential high. That was the reversal alert there. Straight up. Yeah, so obviously when you get something like the New Zealand powering up and the Swiss franc powering up at the same time, you typically get an accumulation. But obviously this New Zealand dollar. So this really looks like news in the Asian session, doesn't it? But there isn't any. Can't figure this one out. They just basically have just started a massive buying frenzy during Asia for some reason. I don't know why. Morning, Bradley. Morning, Keith. Can the ORBEA trade multiple instruments at once? Yeah. Yep. So you just stick the ORBEA on whatever instruments you want, and yeah. So trade all indices. All you do is you set a magic number. So each of these has a unique magic number in the inputs. You just put a unique magic number in so it knows which trades it's got to manage. Yeah, that's DAX broken long. We're off. Good propulsion move just gone in. Right, ADRs. I think I've answered everything now. So Aussie dollar CAD. Hit to the upside, short on this one, first short. So this is an H1 M5 mean reversion entry. So we're extended on the hourly. 5-minute reversal alert went in this morning here, there. That was your first reversal alert this morning, which was there. So in entry this morning, obviously it's just pushed up a little bit more this morning, made a new high. So new reversal alert is there. So ADR reversal and an H1 M5 mean reversion. Not the best trade in the world considering the strength of these two at the moment, but obviously you can see I got out of the last long there, which was again an H1 M5 mean reversion, I think. Yeah, look at that. RSI to RSI in 48 hours. That's unusual, isn't it? You don't see that very often. So that was an H1M5 entry on Wednesday. Got out of that yesterday. Now we're going short again on Friday. So we're looking for a pullback on this move. So if this is going to continue up now, we're looking for a pullback into propulsion somewhere. So in on that one. Aussie dollar yen. Short on Aussie dollar yen. Again, TP. I'm just going to stick it down here for the minute. I'm going to put it further just in case we do get the intervention. I'm going to stick it down at the monthly low. That's only 4 ADR though, isn't it? I mean, that's nothing. I don't think we're going to get the intervention if this move continues, but I'm not sticking my TP at 4 ADR. I'll stick it at more than that. So yeah, in on the first entry on that H1M5. So pretty much the same play as previous. Yeah, so that's the trade I took there. On the H1M5 mean reversion, it's the same play, short, looking for a pullback. It's either going to be a pullback continuation or it's going to be a pullback and drop. US dollar yen 125 ADR, so the yen's still pushing. Again, I'll watch this later, but I'm not, target ordinarily on an ADR reversal or an H1M5, you're looking at somewhere between half to an ADR move to the downside. So on this one, it's 82, which is roughly in that propulsion gap. That will be your target, assuming that we're going to do that. But obviously, as we know at the moment with what's going on with the yen, it's more likely we're going to do that. So hold on to it if you can. Aussie dollar, US dollar. First, no, sorry, that's an ADR hit to the upside, isn't it? Yeah, so ADR hit to the upside. I'm long on this already, though. This Australian and New Zealand move is coupled perfectly with this US dollar weakness, and which is why we're getting this 2-day parabolic move. Look, so yesterday we put in 87 off of basically off of 60, so 125, 150 ADR-ish type move, and we've done another 100 ADR today. This is what I mean, with these moves when they start, when they get going after such a long time, it's multiple ADRs in a row because you can't just take profit and go pop. Yeah, if you've built yourself a position over weeks and weeks in a bank and you've got millions or hundreds of millions in profit, the way to get out of those positions is to execute all of those orders in reverse. There's not enough people in the market to execute all of your orders, so you have to wait. You'll be in a queue basically going, I need to execute 25 million shorts on this. Can I have 25 million? They're going, I've only got 10. Well, I'll have your 10 next. And this is why it doesn't happen in one day like that. That's what an intervention is. But the intervention, they don't care what price they get. Their purpose is to kill everybody. But in a profit take move, you get multiple ADR moves because it takes them a while to execute. So this is what we're seeing playing out. Euro New Zealand, so that is an ADR reversal. Obviously, I'm long on that at the moment, so looking for that. Testing up at the 2-week high. No, that's last week's high, sorry. Last week's high. We're walking into propulsion where this weekly move started, so we're likely to find some resistance here and hopefully push back down into propulsion out of that accumulation and then rally from there. Euro New Zealand, that's obviously coming down hard. I've got longs on this one at the moment. Euro next week, looking for some movement to the upside. I'm hoping Lagarde is going to help out this morning rather. He's speaking in 10 minutes. And then we've got the CPIs. So the fact that we had good CPI, well, not good CPI, but we had as expected CPIs for Germany and Spain is an indication that hopefully that inflation figure is starting to tick up again, which puts interest rate pressure on, which will rally the euro. So although it's coming down at the moment, this is because of the New Zealand dollar and the Aussie dollar move. But I think this euro is poised, ready for a little bit of a rally back up now. We had a negative move on the euro on a positive interest rate change, which is not normal. So if we get another positive interest rate change, that will bolster the market. It just obviously depends with this one how strong they are at the time. But no problem really being long on this, especially after a drop like that. If you look at it on the 4-hour, we're coming down to extension on this. That's a big drop. 2 weeks solid down. 3 weeks really, if you class that week. But I mean, it's been coming down for a while, isn't it? So looking at these areas down here, previous month's low, and then we've got the month before's low in this propulsion gap. So if this does continue to come down, there's another entry and another entry. If we get all the way down there before we get a bounce, we're going to be extended below that 20 level on the 4-hour. We know what happens when we get there. Yeah, can't sustain it, so we will get the pop out of there. Pound New Zealand ADR to the downside. Again, long on this one, expecting some pound strength to come through. The euro and the pound, I'm expecting both of those to have some kind of profit take move or rally starting soon. Not really helpful, the New Zealand dollar at the moment, but so that's an ADR hit to the downside. I've already got 2 on it. Third one's gone on this morning on the ADR extension, 5-minute reversal alert. So my entry was there. And we've just had another reversal alert there off of a double bottom. So there's your potential W formation starting, at least pushing back up into there for an ADR reversal. But obviously, I'm expecting it to go an awful lot further. Why am I looking at a 1 minute chart? I thought that was a bit quick to have a reversal alert in because we've only just got one. So 1 minute chart. So yeah, that was the first reversal alert, which is off of that. There's your W. So that's 125 ADR. Wait for that reversal alert if you're not already in it. Although if you're using the EA, you will already have got into that one. Aussie US weekly range hit. Still pushing. New Zealand dollar CAD. Again, these are all going to be New Zealand and Australasian based. So there's your New Zealand dollar CAD, 150 ADR. Canadian dollar still coming down off of oil. So oil started its retracement yesterday. Need to see what happens today. We've got the news this afternoon for the CAD. We've got the GDP figure. So if that comes out as a negative with the oil drop, we should have a nice continuation on that one today. But at the moment, oil is not moving. So, but the New Zealand dollar obviously is. So this one obviously is an H1M5 mean reversion as well. So I'll be getting into this one short on that reversal alert today. And that's also a 150 ADR. So as soon as that starts to drop, that'll be a nice entry. It's not quite a 150 ADR. Look at it. It's literally a spread out from triggering 150, but it's pretty much there, isn't it? New Zealand dollar Swiss, again, same thing, hit to the upside. I'm short on this based on Swiss franc strength that we're expecting to come through, which we've had, but obviously this is pushing really hard. There's New Zealand dollar US dollar 150 as well. So there's your reversal alert, just triggered on that one for a short. So look for a pullback down on that. Not sure how sustained this is going to be, this New Zealand dollar move. So, you know, we're waiting for a retracement on this New Zealand dollar, the Swiss franc. So we'll see what Lagarde says in a few minutes. New Zealand dollar yen, again, all extended to the upside. I'm in short on this one as well. Again, TP on this. If we get the intervention loads, doesn't really matter. Somewhere down there, it will get it. New Zealand US. So that's out of a double top now. So we flew straight through that level. Didn't stop. So you got propulsion gap fill coming up here. There's another one up there. That one's done at 150 ADR. So watch this area here. So we got these highs and that propulsion gap for a bounce back out. So nice looking short opportunity on that one. It's going to take some US dollar strength to trigger that though, which at the moment, obviously we know we haven't got. So if you're going to mean revert this one from 150, I mean, that's very extended 150. We're looking for 25 pips for half an ADR. So you're only looking to come back down into this accumulation really for half an ADR's profit, or 3/4 of an ADR will take you back down somewhere into there. US dollar yen. Yeah, I wouldn't mean revert this. That's dying. US dollar Swiss ADR. This to get this many ADRs by the London Open, just be careful. Remember, we're in contracted ADRs at the moment because we're coming out of summer trading into September, which the volatility contracted below summer trading in September. These ADRs that we're seeing here aren't even normal daily moves that we would have experienced in July. These ADRs are so tiny at the minute. 137 on pound New Zealand. Yeah. So, I mean, the last couple of weeks, I've been looking at this going, oh, look, it's 150. We're normally looking at 300s. Look, it's 140. Now we're at 137. This is still contracting. So these ADRs, you will see 225 ADRs easily go in if we put in a normal daily move, which we would typically experience in June, July, or any other summer trading month, non-summer trading month. So watch these because this could easily be down here today. go back and look at normal days in the past. So going back into, normal May time, we're looking at 115 pips, 90 pips, 87, 82. Yeah, so you're looking at 90. So roughly 90 ADR is a normal ADR for the US dollar Swiss. It's currently trading at 60. Yeah, 90 is the norm. We're trading at 60. So your normal movement is a third of the norms we experience in normal market conditions at the moment. So you're going to get much bigger ADR hits than you would normally get, because obviously price, if it's coming back into normal sized movement now, we are going to see these lighting up like Christmas trees. Yeah. Coming out of summer trading, if you go back and look at previous live rooms from previous years, we've played bingo in here where you've had the whole lot. It's all red. Everything's red. You might have one currency which didn't quite get there. It's totally normal because we're contracting. It takes 10 days for the market to get back to normal ADRs after we've come out of summer trading, which we haven't done yet. So this is potentially what we're seeing. So be a little careful with ADR reversals. You can see how quickly we're undoing this move on the US dollar Swiss. So these could not stop today, and especially if we get negative news this afternoon on the GDP for the US dollar, the GDP for the CAD and the PCE, and if Michigan comes out as a negative, we'll be down at 225 ADR in the US by the end of the day. So just be careful trying to get mean reversions on these. DAX is stuck. So propulsion gaps holding. There's your initial break move. They've tried to pull it back. Buyers have taken back control, bullish engulfing. So we should get a rally out of this today. How far, though, remains to be seen. So there's your ADRs. There's no point in looking at monthlies, obviously, because it's the last day of the month. Weeklies, obviously, pretty much we know. We've looked at them many times this week. RSIs, so most of the 4-hour RSIs all have undone themselves because we've had obviously the profit take moves just starting to kick in. So Aussie dollar Swiss is extended on the 4-hour. Still, only just though. We've had an accumulation and then a push back up. So again, divergence. Look, I've talked about divergence quite a lot in the last week, because we're seeing a lot of it, and it just shows you how crap divergence is as a signal, doesn't it? Doesn't mean anything. It's nice. It's a nice to have in a normal market move, but market will be more irrational and push further than you can possibly afford. So, divergence works for a period of time. It's one of those things you land in, and it's very successful for a while, but you always hop away from it. It's one of the system hopping points. You discover what divergence is and you go, oh, this is the best thing since sliced bread. And then all of a sudden it fails 20 times in a row because the market conditions and fundamentals shift. Because you haven't learned about fundamentals yet, you think divergence is great. And then when the fundamentals take over, divergence just fails, like everything does. Yeah. So it looks good and it works well when the normal markets are doing normal things, but not in a squeeze. So that's extended. Aussie dollar yen's extended, as we know. Euro New Zealand, we've already looked at as well. That's down to the lows. So you've got extension there, waiting for a pullback. Already in that on the H1M5 as well. New Zealand dollar Swiss is also extended, as we know, to the upside. Swiss franc's been killed because of their stupidity of not increasing their interest rates and not telling us about it. Paying the price for that. But it is starting to power back up again. But obviously this New Zealand dollar has gone nuts today. So and New Zealand dollar yen extended to the upside. Don't need to talk about shorts on the yen, do we? There's lots of hourlies as well, but all of these hourlies, if you look at all these reds here, and then look at the ADR dashboard, we've covered them all. Everything that's extended on the hourly is extended on ADR. So it's the same thing. This is why you don't trade ADR reversion and ADR reversals and H1M5 mean reversion at the same time, usually, because they're going to be the same trades. So all you're doing is you're doubling your exposure on the same instrument. So pick one or the other, ADRs or H1M5s, but those are the same as ADRs. There you go. That's everything pretty much covered. Thanks for subscribing, Atif. Welcome aboard. Sebi, I'm currently in profits, but skeptical because my positions are rallying hard during Asian sessions. It's typically undone in the New York session with the DAX, yen, and euro. Did you let the rally continue to the New York session? I don't know what you're talking about. What rally? Told you that supermoon would cause a big move. Correct, AJ. You were absolutely right yesterday. I was totally wrong about not waiting for the blood moon, wasn't I? Can you make a Schumann resonance EA? No, because I don't even know what that is. Sorry, got to Google it. Spectrum peaks, an extremely low frequency portion of the Earth's electromagnetic field spectrum. If you can tell me how to detect them, I can make an EA for them. But unless you can tell me how to detect them, no. I have got a good coin I can flip, though. I suspect it's as accurate. But we'll see. That's stalling out a little bit. Am I on National Geographic? No. So, Stebby, what you've just said about letting profits run, blah, 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 blah. And you probably haven't watched the bootcamp yet. So I'd go and watch the bootcamp on the website if you haven't watched it. I'm not intraday trading. I'm position trading. It's nothing to do with intraday movement. So what New York does has got nothing to do with my positions at all. It's longer term. Do I need to have the market reversal indicator to use the EA? No. The market reversal alerts EA is completely independent. Works on its own. Doesn't need anything else. You need a silver foil hat with a point on it. I need a dunce hat. Zhao, I should have listened to you. SMC is all BS. I lost so much money trying to learn it. Should have stuck with no stop loss. Yes. I would have been a millionaire by now. No, you wouldn't. But you certainly wouldn't have wasted all that time on smart money concepts. Smart money, there's no concept. This is the thing, you know, I keep saying it. And this is why I put that video together on the website about buying courses or doing courses. It doesn't matter what strategy you use, what you learn. It all has a failure rate because of one simple thing. You place an order in the market to stop you out with a loss. So it doesn't matter what strategy you use, whether you call it smart, whether you call it dumb, whether you call it footprint, whether you call it moving average, whether you call it this, that, the other, whatever. If you put an order in the market to lose money, you lose money. It's that simple. There's nothing smart about it. The banks don't do this. Who makes the money in the industry? The banks. Why? Because they don't place an order to lose money. What they do is they wait for the profit to arrive and then they take it. Yeah, because the market does that all the time. If you try and predict which of these peaks is going to be the one that is going to be the turning point, you're going to fail more than 50% of the time. Because you can't do it. Because the banks can't do it. Because every time the banks push it up to there and go, I want to go that way now, a bigger bank comes along and pushes it up further. And then they go, all right, I'll wait for it to come back down again. Then they take their profit. They can't even predict the peaks. So what the hell chance do you stand as a smart money concept trader? Doesn't work. It just doesn't work. Everything you learn is telling you to do the same thing in a different way. Place an order in the market to lose money. So what happens? You do it. And what happens? You happen to lose money. Just what we do. Because we're sheep. Yeah. The wolves are sitting in their high towers in the banks going, thanks, sheep. Tasty. TradingView already has a moon indicator, which works about 50-60% of the time. Indicators don't have a strike rate, AZ. There's a fundamental problem with your with your comment there. Yeah, indicators do not have a strike rate. Yeah, I cannot tell you the strike rate of the market reverse alert indicator because it doesn't have one. A strike rate is based on a strategy's risk reward ratio. Yeah, so if you get into a trade here and you place a stop loss here and you place a TP somewhere up there, and this thing comes down and hits that, that was a failed signal. If you place your TP there, it was a successful signal. That has nothing to do with the success rate or strike rate of your system strategy or you as a trader. Where you place your TP and your stop loss is what makes an indicator successful. If an indicator gives me a signal to go short and I take that short and get out with 1 pip profit 99% of the time, but my loss is up here when I take one, it might look like a successful system or strategy or indicator, but it doesn't make money because the loss is bigger than the 1 pip rewards that you take 99% of the time. Okay? There's no such thing as a strike rate with an indicator. An indicator tells you something that's happened historically. How you make money out of that thing on your chart is all down to where you place your positions and when you get out of the market. And you get out of the market by either TPing or stop lossing, or you get out of the market by not using either of those and closing the position when you're ready to close it, whether that be a plus or a minus. That thing doesn't give you any information apart from the market's just pushed up. The market moved from here. Last time, on a monthly level, it turned from there. This thing's been pushing a long time. That's the information that all this is giving me. How do I use that to make money? Well, I push the sell button there. Whether that I make money or not, my strike rate is either 100% or 0% on this trade is down to whether or not I close it here or here, or here, or here, or here, or here, or here, or here. See what I mean? Strike rate on this trade is only going to be determined whether or not I close it here or here. Because that was up there, that isn't causing my strike rate. This is the common misconception everybody has with systems and strategies. And this is the holy grail hunt, isn't it? I'm looking for a strategy with a 50% strike rate and a 2-to-1 risk reward ratio, or a 1.5-to-1 risk reward ratio. Why? Because I've been told if you have higher profits than your losses and you can get a 50% strike rate, you cannot fail to make money. Not true, is it? Because you're looking for a system or strategy with a strike rate. Strike rate's got nothing to do with any of this. This is why everybody loses money, because you're just hunting for something that physically it will never be able to find because it doesn't exist. Anyway, sorry, AZ, I wasn't having a go at you. I was just saying, this. Even the moon indicator can only have a 50 to 60%. It works 50% of the time. What does that mean? The moon only comes up half the time? I don't think that's true, is it? DAX has pulled back into the opening range. So failed upside move. Might want to come back and do this today. So no movement again. Lagarde is talking. So we may get a little bit of volatility coming in while she's speaking. I suspect maybe we're either hanging around for her or we're hanging around for CPI. So not a lot of volume is there today. Facts, 100% never going back to that risk reward BS again. Yeah. True. This is what we do. The only reason we as traders think we can make money in this is because we are shown other people doing it. The other people doing it aren't doing it. They're showing you circumstances which have happened in the past, which you could have if you had done something. Bankers drive around in Ferraris because they move the market. They have a 100% success rate because, or not 100% success rate, but they have a very high success rate because they can move it from there to there. So if they can move it from there to there and they press the short button there and then they move it down to there. They cannot fail to make money. That's the only reason everyone goes, traders make a lot of money. Yes, they do on Wall Street, and they do in London and Singapore and Tokyo and all the central banking hubs around the world. Only because they can move it up and down, not because they found the holy grail strategy. What we're looking for, isn't it? We're looking for the guy standing in front of the Lamborghinis to show us the way. Guys fighting in front of the Lamborghinis haven't got Lamborghinis. That's the problem. I'm just taking from a visual. I had a look at it on the daily, and about half the time it gives a decent tops and bottoms. Take it. Then we go back to the old, can I hold it thing? You know, someone was talking about the 500 period moving average the other day. You know, and moving averages, yeah. My point on moving averages is, you look at the 200 moving average. It's something that is very widely used. This is this dotted line on the chart you can see here, the 200 period MA, right? I haven't adjusted the 72 and the 24, right? So the 72 and the 24 that you can see on my chart here are there because they're monthly and quarterly. Look at the success rate of the 24-72 moving average in a trend. Pretty bloody good, isn't it? Look at the 200. Didn't touch it. Didn't touch it, didn't touch it, went through it, reversed. Didn't touch it, touched it, but failed, touched it, touched it, touched it, didn't go anywhere, touched it again, hovered around, came back, touched it. How's this 200 moving average helping you? If you adjusted this 200 moving average and made it, if I can click on it, a 250, yeah, now it changes. Oh, hang on a minute. It was more successful there, and it got closer there. So you change it to a different one, a 500. Now all of a sudden, oh my God, look at it. It's like predicting the future. Look at it. It picked it to the absolutely 100% perfect. Yeah. There it was 100% perfect. Everywhere else it failed. Yeah. There it worked beautifully. Everywhere else it failed. Yeah. So it doesn't matter what moving average you use. You will always be able to enter a number in here that in the past you can go, wow, that worked better than the other moving average. In the past. What is going to happen in the future? This thing has got no idea. Yeah. So it doesn't matter. No one should ever use a moving average for anything, for a bounce. People say, oh, it bounced off the whatever moving average. It didn't. It moved up there. And I didn't say it yesterday in Telegram, but the next question was going to be about the moving average. What the hell has the price action over the last 500 days? We were talking about a 500 daily moving average. What has the last 500 days of price action average got to do with what this candlestick is going to do for the next week? Nothing. Yeah. You're looking at a line here, which is showing you the average price over the last 200 days. What's the average been over this year? I don't care. What's that got to do with anything? Nothing. And if you then start talking about the 500, the last year and a half of daily movement isn't going to help me here. If it moves up to where it's been in the last 500 days on average, the market's not going to bounce off of something because it did that. When the banks decide where it's going next, it will move. You will find a lot of coincidences. Oh, look at how coincidental that 200 bounce was. Look at how coincidental that 200 bounce was. Look at how shit the 200 was all the way through all of this and all of this and all of this and all of this and all that. Look at that. Oh my God, there's 3 instances where it worked. Out of, I don't know, we're going back to 2020. The last 3 years, 3 instances, the 200 moving average. Change it to a 500 if you want. Still got no relevance whatsoever. None of it has. Because it's got nothing to do with what's going to happen in the future. Rubbish. The 72 and the 24, however, are measuring quarterly and monthly movements. If someone is going, if a bank or institution is going to buy something on a long-term investment, they will buy in cycles for reporting, which are monthly and quarterly. This is why these work so well in a trend, because if they are going to buy long-term, the market will buy it, profit take it, buy it, profit take it, buy it, profit take it. When does it take its profit? When it needs to report to the board. When does it report to the board? Every month and every quarter. What's today? The last day of the month and the quarter. What are we seeing? Huge moves. Why? Because they're profit taking, so they can get the profit on the books for the quarterly report. This is why these moving averages work so well in a trend. Utterly bloody useless if it's going to be range bound. So, because it's all past information, isn't it? This line is telling me what's happened over the last month. I can know what's happened over the last month. I can see it. It went up. I don't need a line to tell me. I don't need the line going up to tell me it went up. But what the line does help you with is when it pulls back, if they are going to continue to buy the thing, they will do it because they will take profit on the percentage of their move. And that's what that does. Other than that, I haven't found a moving average on the planet that actually makes any sense or use whatsoever, especially a 500 daily. You know, it doesn't, it's got no relevance, is it? Like this candlestick, looking at on the 4-hour chart here, is a down candle. The previous one was a down candle. The previous one was a down candle. Does that mean the next one's going to be a down candle? It's got absolutely nothing to do with it. The next one will be whatever the buy and sell order bias is, long or short. Doesn't matter, does it? Load of just nonsense. Market is driven by supply and demand in banks, and that's it. Oh, LPFX is back. Hey, mate, last week you shared a Telegram group where they publish free signals. No, I didn't. I slag you off every time you come in here. I certainly didn't share you. Name is HelpYourFX free Forex signals. So I Googled it and joined the group. Oh my God, since last week I made almost $300 with them. Yeah, but you've got a $150 million account. That's not very good, is it? You only made $300. Pretty shit, if you ask me. Thanks again for the recommendation, brother. I'm not your brother. I don't know you. Goodbye. Report. What should we report them for today? Terrorism. Bye-bye, Helpy. Sorry, you can tell I'm in one of those moods today. LPFX, my God. Biggest scam going. Honestly, the more I contemplate it, the more I'm convinced it's absolutely irrelevant. What reason you use to get in, it's all about managing the position. Exactly. AZ, you have been listening. I felt terrorized, yeah. Terrorized by them. Exactly. I've said it before and I'll say it again. If you pick an instrument now and pick a time frame and flip a coin and pick a direction, I will go and place an order in it and I will get out of that order with a profit. Because I have no idea if it's going up and down, and your coin flip has got no idea if it's going up and down. When I press that button to go long or short, I will just wait until it's in profit. And if it goes too far against me, I'll add another position and wait till it goes into profit. That's all you have to do in the markets to make money. Sometimes it's hideous and hell and it lasts forever. Sometimes you're in and out and you're done in 24 hours. You've no idea. I have no idea. No one's got any idea. Look at the pound Swiss. Did I have any clue yesterday when I took that reversal out on the 5-minute chart on that extension, it would be out today? No. It could have gone that way for 3 weeks. I have no clue, but my job is to basically get out when I can get out with a profit. That's it. I have no idea when that candle happened, whether it was going to go up or down on the next candle, because you can't predict that. You get in, wait, get out. What are your thoughts on the US index tanking? They shouldn't tank. They should rally from here. It all depends on what happens with the news. Yeah, these indices at the moment are struggling, really struggling. Yeah. So if you look at the normal expected market movement, we're not getting it. I run a strategy which is published on the Market Reversal Alerts EA set files called, well, it's just basically the S&P pullback strategy, which takes advantage of bull markets. I've been waiting I turned it off here when we had this big collapse below that low, and I haven't used it since. I've been contemplating turning it back on for the last good couple of months. I keep looking at this thinking, it looks like we're going back into a bull market. And then every time I think it's going back into a bull market, it struggles to make new highs. And then we broke out and we went, oh, this looks beautiful. And I said, I'm going to wait for it to get above this high so that we know at least we're going to challenge that. We've put in bearish market structure again. Yeah. If this is going to continue to come down, that means the US dollar is going to be weak. But we're coming off the 200 moving average, look. It's bouncing off the 200 MA. Like, just like it didn't do there, and 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 it didn't touch it there. But this time it is. That means it's definitely going up, doesn't it? This rally at the moment we're seeing is based off of US dollar weakness. And I get the feeling we may see that US dollar strengthen up again because the interest rates are not doing their job as well as the Fed think they are. The inflation has just ticked up by 0.5% quarter on quarter, meaning that, yes, we are really high interest rates, which is fantastic. And it's really done a good job of getting this down, but it's stopped doing a good job of getting this down at the moment. If your target is 2%, that is not what you need. If they come out bullish and say, sorry, guys, I know your mortgages are tough at the minute, but we need to, otherwise this is not coming down and you're all going to go unemployed, the US dollar is going to rally again. So this at the moment we are seeing is the profit take pullback move on that previous rally, which is helping the indices to move up. But long term, I'm not sure we are in a bull market yet. Yeah, this market structure break is very orderly. That is very easily, I think, what we could experience next. However, it may do something along those lines and come and retest this area in the way that it did here. I don't know. But we need guidance from the Fed, and that's not what we're getting at the moment. We're missing it, aren't we? So there's nothing coming out of Lagarde at all, is there? She's either she's not saying anything of importance, or I don't know, she's just not making an impact. So I think we can kind of wipe that one off. That was 20 minutes ago. So CPI at 10 o'clock is the next news for the euro and for the DAX. So I don't know. I don't think there's anybody in any market at the moment that could give you any real solid forward guidance as to what's going to happen next. If you watch the Bloomberg channel, all of the hedge funds and the pension funds are running minimized risk at the moment because there's just no certainty on anything. They're all massively diversified across metals, across stocks, across FX, across oil, across minerals, across all sorts of things, because they won't put their money where typically they get the best return, because it's not at the moment in any way or shape guaranteed that this bear rally is over. Yes, we've come out of bear volatile and we are now in bull calm. But why does that mean we can't go back into bear volatile again? The market's still not right. The world is still not right. Nothing's right economically anywhere in any country at the moment. We've still got a war on. We've got another pandemic hitting the UK. Our biggest airport in the world, Gatwick, is running minimized flights because COVID's just wiped out the air traffic control towers. COVID's coming back. Is it coming back with a worse strain? Are we going to get another pandemic? Is it going to cause another lockdown? There's so many things. So you just have to play it day by day at the moment, and you can't really speculate in any direction at all at the moment on anything, I don't think. The only thing we know that is potentially going to happen is oil. Going to continue to rise. But that's about it. The intervention, obviously, will only happen if it needs to happen. So regarding the intervention, that will only happen if US dollar yen rallies. Because there's no need to intervene if the market is doing what you want it to. So if the market now sells off, then the Japanese will be happy and they'll shut up and everything's fine. If it continues to rally, the Japanese will intervene. That is a trigger caused by this instrument. So, you know, the answer to the question of what do I think about the intervention is it will happen if it goes up there. If it goes down there, it won't. Either way, that's the position I want at the moment. And you have to wait. It'll happen at some point or it won't happen at some point. There's nothing you can do. You can't force it, can you? Debbie, keep an eye on Monday high. Well, what lot size would you recommend for a 5K account? If you get the market reversal alert EA, it will calculate it all for you, so you don't need to worry. But if on a 5K account, use either, if you're talking about position trading, I assume, use 0.01 or 0.02 on a 5K. It's all covered in the bootcamp. If you go and watch the bootcamp, if you're talking about position trading, that is. Otherwise, lot size is calculated on risk. But if you're using a stop loss strategy, for example. But watch the bootcamp. Everything's covered in there about how to position trade. DAX is rallying again. We're holding, but contracting into a symmetrical triangle at the minute. One way or the other. Right, that's all I've got for you this morning. So I'll be monitoring these. We're having a little pullback at the moment. This looks like it might, yeah, yen is weakening. So this is a pullback in the yen. Everything's kind of gone a little bit sidewaysy quiet at the minute, apart from these Australian pairs, which are just going nuts still. CAD Swiss still coming down nicely as well. So yeah, we'll come back and look at these this afternoon, obviously, and see what's happened with these. But we just need to hold on today, really, and just see where we go. It's Friday. It's the last day of the month. There's a good chance we'll get a lot of volatility coming in today. We may not. Don't know. As I say, I've not sat through an end of quarter like this before, so difficult to tell what it's going to do, isn't it? But everything has started to move. So as long as these continue, we'll be quids in either later this afternoon or early next week, hopefully. So we'll see what happens. But just be careful, mean reverting stuff today. Last day of the month, last day of the quarter, quite typically we can get big moves in. So when you're getting things sitting at 100 and 125 ADR, you could be down at 200s. If that's the case, you've got scalings, obviously, and you get out later. So just be a little careful. Especially with these New Zealand dollar pairs. This is a really big rally from the New Zealand and the Australian. So especially from the New Zealand dollar. So you can tell by the Aussie New Zealand look how strong the New Zealand dollar is. So Aussie's rallying, New Zealand's rallying, Aussie New Zealand's come down pretty much in ADR. So you can see this 90% New Zealand dollar movement. So be careful with them just in case, because we've got rate announcements coming next week. News, obviously, 10 o'clock, watch out for the Euro news. We've got the GDP and the PCE before market open. So I'll be back at 2:20, and obviously we'll trade the US Open. All the news will have been out, and then we've got to worry about Michigan at 3. So we'll see what the Open's like, but we will probably get some movement off of Michigan today, I think. They'll probably use it to manipulate a little bit. DAX play for me today, I'm long. And I will be looking basically just to get that 2R in, protect the second position, and see if we can get a runner up into here. But if it comes down and hedges, I'll be watching the gap fill. But if this hedges today, I might just leave it on and see if it can get a big move, either ADR up or down. But hopefully, we'll just continue this long break. I just hate leaving gaps. But, you know, we left that one. That one we did on the day. That one we did immediately. There wasn't one there. So it might be that we rally up and then we come back and do this one next week. Yeah. See what happens. But Euro news. So this could well all kick off on the Euro flash CPIs that are coming out at 10. All right, so have a good morning. I will be back this afternoon at 2:20, back same time Monday, 7:50 for the Frankfurt session. And then we'll see how we go. And hopefully it's a profitable day. Have a good one. I will see you guys in the next one.